what we're going to be looking at here is just a basic analysis of some equity data here for a company, and based on the equity data we're given, we're going to develop the equity section here on the balance sheet here for this company. And what we're going to be looking at here is common stock versus treasury stock, how it affects the equity here for the company. And this is our equity data here. It's for Corp A. This is the stockholders' equity. It's in millions of dollars or hundreds of thousands of shares here. So we'll be looking at 2 years here, 20x1 here and 20x2. And what we would have for stockholders' equity here, we'd have the additional paid-in capital. That's the amount above the common stock par value here that's showing, and it would be net of any treasury stock additional paid-in capital, but we're just going to look at treasury stock on one lump sum here as a cost here, and then we'd have our common stock par amount here, and then we have retained earnings here that the company has, and then we have the treasury stock listed here, and these are total amounts here for each of those categories, and then we're showing here the total stockholders equity. So what we want to really look at here is this here. This treasury stock, that's actually a reduction to shareholders equity here. So that we have to subtract out here to determine the total stockholders equity here. We'll look at that here when we develop the balance sheet here. But our total stockholders equity, just so it isn't confusing here, it's the additional paid-in capital plus the common stock par value plus the retained earnings here, and then you would have that sum amount here. You'd have to subtract out the treasury stock here. That's the key here. Just remember, treasury stock here is a reduction to stockholders equity. Then the other thing we're given here is the common stock shares, the number of shares issued here, number of shares authorized, and then the treasury stock, the number of shares we have in treasury stock. So what we want to look at here is we want to really be looking at the cost and per share here for our treasury stock, and also the par value here for our common stock. And what we want to look at here is understand the common stock, the number of shares issued here. Those are the total number of shares here that the company issued here in common stock. But those also include the treasury stock shares that the company bought back here. So at any one time here, the number of shares that are actually outstanding here is reduced by the outstanding would be the number of shares issued here, and you would have to subtract out the treasury number of shares that the company bought here and is holding as treasury stock shares. Okay, so we'll get into that later here, but first off, let's make an understanding here about this treasury stock, and we're going to be looking at it on a cost per share basis here. Okay, so to determine our cost per share basis, all we do is we'll take the total amount here in treasury stock. Let's look here at 20x1, 1,836,000, divided by the number of shares here that they're holding in treasury stock, 54,000 shares here, and you're going to get a cost per share here of $34 per share here for 20x1. Now we could do the same. You have to do the same thing for each of the years here. So if looking at year 20x2, you just take the total amount of your treasury stock, in this case 2,856,000, divided by the total number of treasury stock shares that are being held here by the company of 68,000, and you're going to get a cost per share basis here for your treasury stock at $42 per share here for 20x2. The key here is when you're dealing with this treasury stock, it's based on its cost here, and its cost is changing here from year to year here, and we looked at it here on the basis of a cost per share basis. Now when we're dealing with the common stock, we work with the par value of the common stock in this case here, and to determine the par value here, we do the same thing as we did with the treasury stock. Just take your par value, common stock par, total par amount here, 20x1, 1,080,000 here, divided by the common stock to shares issued here. Just remember, you have to work with the shares that are issued here, not shares outstanding or authorized, but you work with the shares issued here. So you take that total common stock par amount here divided by the number of shares issued here, and you're going to come up with $2.50 per share here for 20x1. And do the same thing here for 20x2, and you're going to find out that you take your total amounts here, common stock par, divided by the common stock shares issued here, and you're going to get $2.50 per share here. So what we want to look at here is the common stock par value. You can determine it's constant. It's constant from year to year here, and you can determine it just by looking at one of the years here. Whereas your treasury stock, the cost per share here actually changed from year to year. And in this case, we had an increase here from $34 per share up to $42 per share. Okay, so now let's go and we're going to use this data here, and we're going to develop our stockholders equity section here on our balance sheet. Okay, so here's our stockholders equity section on our balance sheet and how we would state it and how we list it here and develop it off that data that we have here. So we'd have here our stockholders equity here, and we're looking at, we'll list the date here at 20x2, that's that second year here, and we're going to look at it in terms of millions of dollars or hundreds of thousands of shares here. So what we would have here for our paid-in capital, we're going to list each of these amounts here. We're going to have our paid-in capital, additional paid-in capital, our retained earnings, and then we're going to have to subtract out the treasury stock cost amount here to determine the total stockholders equity. So let's look at how we'd state that here in our equities, how we set up our equity section here based on that data we had. So we take our paid-in capital here, that would be the common stock. We would list the $2.50 par per share amount here, and then we would list out the number of shares that are authorized here, the number of shares that are issued here, and the number of shares that are outstanding. So this is where our paid-in capital account here for the par value, that's again based on the number of shared issues here, not the authorized or the outstanding, but the shares issued. So in this case, we had 436,000 shares issued here in common stock times the $2.50 per share par value. Total amount here, $1,090,000 of common stock par value. Now, let's look at the shares outstanding and how we calculated that to be 368,000. So we know the number of shares that we issued here. That's all based at the 436,000 here, plus the treasury stock that we are holding here, and that we have at 68,000 shares here. So we would reduce so we subtract the treasury stock that we're holding here, 68,000, from the total common stock shares issued of 436,000, and we're going to get the number of shares common stock outstanding here at $368,000, or 368,000 shares, excuse me. So just remember here, when for the paid-in capital of common stock, for the par amount here, it's based off the number of shares here that are issued, but you also have to note here the number of shares authorized and the number of shares outstanding. And then we got our additional paid-in capital here. That was to our common stock, and we've got that amount here. So we'd have our total paid-in capital, we'd have to list that here. It's simply the common stock par amount here plus the additional paid-in capital of common stock gives us our total paid-in capital here. Okay, now we go back and we have to list our retained earnings here. So we list our retained earnings here, and then we would come up with a total paid-in capital plus our retained earnings here. So we take our total paid-in capital, in this case $2,872,000, plus our retained earnings here of $14,334,000, gives us our total paid-in capital here of $17,206,000. Now was where our treasury stock comes into play here. Now again, I told you treasury stock is a reduction to shareholders' equity here. That's what the company bought back, what they're holding, and that has to be subtracted here from the total paid-in capital and the retained earnings. So our treasury stock, it's based on these number of shares here that we're holding in treasury stock at its per share price here, that number of shares. So we're looking at the cost here, the treasury stock, and we would subtract that here from our total paid-in capital and retained earnings here, and we're going to come up with our total stockholders equity here at $14,350,000. So that's about how we go about here, just doing a very basic example here and setting and looking at how we determine here our total stockholders equity, again based on the paid-in capital here, the par amount here for a common stock, and then we had the additional paid-in capital here plus our retained earnings. But we had to subtract out the cost here of the treasury stock, and that's the cost here on that for that particular year that we're looking at here. Then the other thing we want to look at here two items that we really want to look at here. Again, the treasury stock cost, that's the cost of the shares purchased here, that for that particular total amount of the cost here of treasury stock, not for the sum total for over the that the company is actually holding for that particular period here. It's not just the number of shares that were bought here in 20x2, it's the total number of shares sitting in treasury stock. Company could reissue some of the shares, or they could buy back more here, but those are the total number of shares here being held by the company here in treasury stock. And remember, we determined that on a per share basis here for that 20x2, it was $42 per share here, times the total number of treasury stock that's being held, or 68,000, gave us that $2,856,000 worth of treasury stock that had to be subtracted out here to determine total stockholders' equity. Then the other point we want to make here is with this common stock here. So we have the original paid-in capital account on common stock is not affected because the number of shares issued does not change with the purchase here of treasury stock. And we can go back and look at that again here. So note here, the number of shares issued here, remember that was 436,000 here. That doesn't change when we're talking about the par amount here in our common stock here. Even though the company bought back 68,000 here, and there's 368 net outstanding here, 368,000 shares here. So just remember here, when you're dealing with the treasury or the par value here for your common stock, remember that you use that issued amount here, and it isn't affected with the par amount here on our common stock isn't affected here by the treasury stock that's been bought back here in terms of the number of shares here. Just remember here, that's a key point here. But then the other point is here, when you're dealing with your treasury stock, it has to be based on its cost here, and we looked at it on a cost per share basis here, and that's the total number of shares here that the company is holding here. So the treasury stock is a contra equity account here. It's not an asset on the balance sheet, it's a contra equity account, and it's a reduction to stockholders' equity. Okay, so that takes care of basic data here, or basic stating here of stockholders' equity here, and how we would break it out here and state it on the on our financial statements here for a company. But this is just a very basic example. Okay, so that covers our stockholders' equity section here on our balance sheet.